How is it going? It's John here, everyone. I talk about investing, I talk about real estate, and short and medium term vacation rentals, property rentals. Hey, everybody, what are we doing today? We're going to talk about Google stock because what's happening with Google stock, what's happening is they're going to be splitting their shares 20 for 1. Not only that, but actually earlier this week, Amazon split their shares as well. But we're going to talk about Google splitting their shares. And, I would say that I have heard, Warren Buffett talk about how, a stock split, doesn't really mean anything. And he doesn't believe in stock splits. And, one of his, groups is really super, super high price. And he just because he doesn't believe in stock splits. But I would argue that when you look at Google, I mean, even Amazon, again, I'm talking about Google here in this video, basically, for the average investor, that is only, investing with $50,000 to $100,000, or even, less than that, $20,000 to $50,000, or even less than that. The reality is that it is, it makes it very appealing for Google to split their shares. If you take a look, let's go ahead and we're going to take a look into Google's stock price. I mean, right now it's 23.44, so almost 2,350 bucks. So first of all, that point of entry is fairly difficult, for the average person, especially when it comes to the spirit of diversification. But something else too is if you actually already own Google, I was been buying Google at different times for many years, going back to 2011 or 2012. What happens is it makes it difficult to actually sell. You're like, well, I'd like to maybe sell some Google and diversify into some maybe some younger companies that aren't as big market capitalization wise. But it makes it very difficult because with that high price target, you have to sell quite a bit. So I would argue that from both the entry point and then also for the average investor that's not really dealing with a lot, most significantly from the exit point, it makes it a lot more attractive. You take a look at Google, it's going to be splitting their shares 20 for 1. So you figure 23.44, that's going to be less than $120 a share. It's a whole lot easier of a decision to sell that stock when it's $100 versus $2,300. So now what I will tell you is actually earlier last week, here we are, it's, June of 2022, right? We're in the post-pandemic crash. Stocks are starting to get their footing a little bit, which is a little bit of a relief, or feels like a little bit of a relief. But basically, I did a video last week, and what I'm going to do is I'm going to go ahead and link to that in this video. I did a video last week on the big growth tech stocks, the top of the pack, right? Amazon, all the FANG stocks, Amazon, Apple, Facebook, Netflix, Google, and even Tesla, and showing what their market caps are relative to their gross profits. I haven't done those analysis in quite a while because I haven't really been doing videos for about 6 months or more. But basically, I'll link to that video, and Google's actually very, parent company Alphabet is very attractively priced in the way that I look at really when I stack up the companies and look at their financials. In fact, what I'm going to do is I'm going to go ahead and take you in, and I'm going to show you what I'm talking about in my spreadsheet. Okay. Okay, so here we are. So if you take a look, we got Alphabet, Google right up here. I've got their their current price is actually not updated. It's 22.34. Sorry, 23.44. But their market cap is updated, right? At the 1,509. Take a look right here. See basically 1.5 trillion, about a little bit more than that because it's trading higher today, right? I did this analysis last week. So if you take a look at it, their most recently reported trailing 12-month revenue is about 270 billion. Then the most recently reported 12-month gross profits. Just so you're clear, I mean, one of the things that I really do is I look at the gross profits of a company. It's fine that I look at net profits, of course. I want the company to be profitable. But I think there's a lot to be ascertained about the quality of the business that you're investing in, according to the gross profit level, right? So, for example, I'm not talking about Meta platforms or Facebook in this video, but they've got pretty much the highest gross margins of any company out there, right? At 85%, really super, or actually 80% right here, the most recently reported. Very, very, very high. So, you have company like Amazon with 13% gross profits, and then Facebook at 80%. I mean, obviously, there's a big difference in the way that those companies operate, as you can imagine, with such a big difference in gross profits. So I make a big point to actually look at gross profits and then to do a multiple of what the company's gross profits are divided into their market cap and come up with that multiple, and then stack all of these companies alongside of each other so I can make the best decision possible when it comes to actually making that investment in that business, right? So if you take a look at it, the two lowest multiples, when you divide the most recently reported 12-month gross profits into the market cap, is actually Facebook and Alphabet. Alphabet is under 10 multiple. And then Netflix, of course, but we're not talking about Netflix right now. But even Facebook's multiple is actually lower than Netflix. And Netflix is off over 70% from their 52-week high since the post-pandemic crash here in the first half of 2022. But if you take a look, just to give you an example, Amazon here, if you divide their gross profits into their market cap, they're at 19.5, so almost 20. Apple's at 14.5. Here we are at Google, 9.8. So what I did, everybody, I actually I went in and bought some more Google, last week because of, they didn't really get hit too much. I mean, they are down about 20% this year, but they were up a lot more last year. So really, just showing you kind of the reality of what their numbers look like, okay? So here, if we took, we have an article, we're talking a little bit about the 20-for-1 stock split. Alphabet has announced 20-for-1 stock split, which takes effect after the close of business on July 15th of 2022. The stock split could pave the way for the tech giant to enter the Dow Jones Industrial Average. Google stock could be more attractive to retail investors. Amazon stock 20-for-1 as well. Stock split took effect on June 6th. Basically, here is where they talk about it. So Google stock was up 65% in 2021, but thus far in 2022, it's down 19%. So not that big of a hit, especially when you consider Netflix went down over 70%. I had quite a bit of Netflix, which is certainly very painful to experience and watch. So that is pretty much the gist with Google there, everybody. So let me know what your thoughts are about stock splits. I mean, I don't really think that I'm on the same page with Warren Buffett in that respect. I mean, I think if you're investing lots and lots of money, you're working with hundreds of thousands of capital or even millions and millions of capital, it's a different story. But for the average investor, that's going to be something from, let's say, $10,000 up to $100,000, where they're investing and they're making choices. And especially if you're in a situation where you use margin, where you invest with margin, and which I do some of that as well. You are, quite often, especially in times like this with a post-pandemic crash, you're faced with the reality that you might have to make some sells, and it's a much easier decision to sell that stock when it's at $100 a share versus $2,300 a share. That's one thing that really I struggled with over 2021 with Amazon and Google. I'm actually very glad, certainly very glad that I did not sell Amazon, and Google during 2021. And certainly Apple as well. Apple's a different story because their stock already split. But basically, I am very glad that I didn't sell, because I just it felt like it was kind of a big decision to be selling these stocks that are at these $3,000 and $2,300 price ranges, because I really like to have them in the portfolio. But anyway, obviously it's a lot easier to make that decision to sell if you need to, or if you want to for diversification purposes, when that stock is at like $100 or something like that, which both Amazon and Google will be at that around $100 figure, not considering any sort of price appreciation or price decline, here in the early June of 2022. So let me know what your thoughts are on the stock splits, when it comes to Google and Amazon. Just go ahead and put the comments below. Everybody, thank you so much for watching. If you have any questions about any of this content, like I said, go ahead and leave a comment in the comments area. I actually have a background in investing. First job out of college was Merrill Lynch. Then I actually did some investment banking and worked for Sun America in Los Angeles for 3 years. Aside from that, I've also been investing in stocks since literally like 1989. Was a part of the whole dot-com bubble crash there as well. So I've been investing a long time, and I put a lot of different ideas and investment videos in right here on my channel, here on YouTube. In addition, I'm coming out with a lot of material on short and medium term vacation rentals. We're right in the thick, starting the super busy season. Here we are, it's June of 2022. It is fantastic, the best side gig there is out there, whether you're going to be, investing in a new property, you're going to be going in with other, people, or you really have an extra room in your place that you want to rent out, or you have another investment property. You can make a whole lot more money by doing the more medium style rentals, whether that be 30 days or longer, like 1 month to 3 months, or something a lot shorter than 30 days. You typically can make a whole lot more money. I've actually returned about 3 times more than if I were to move all the furniture out and then lease it long term. Everybody, I'll have some links in the description below, so check those out. Otherwise, have a great day.